Palantir Technologies Chief Executive Officer Alex Karp recently made waves after describing the company's latest performance as some of the strongest results he has personally witnessed in the technology sector over the past 10 years. Speaking during an interview with the Consumer News and Business Channel, Karp expressed strong confidence in the company's trajectory. While the headline financial figures immediately grabbed attention, one deeper observation from his commentary may carry even more weight for investors trying to understand where Palantir Technologies stock is headed next. Karp pointed out that a detailed examination of the company's results reveals a very specific pattern. Revenue is growing at an extraordinary pace, while the number of customers is increasing at a far more measured rate. According to Karp, this imbalance is not accidental. He explained that the revenue expansion appears unusual because the customers who truly commit to the platform are entrusting Palantir Technologies with their most mission-critical problems. This insight cuts directly to the core of Palantir Technologies' business approach and helps explain why the company stands apart from many other artificial intelligence software providers. During quarter 4, Palantir Technologies delivered revenue totaling $1,410 million. This figure decisively exceeded Wall Street expectations of $1,330 million and represented a 70% year-over-year increase. In addition to strong top-line performance, profitability also came in ahead of expectations. Adjusted earnings reached 25 cents per share, surpassing the consensus forecast of 23 cents per share, and reinforcing the narrative that growth is being achieved alongside improving margins. Breaking down the revenue by segment provides further clarity. Revenue from United States government customers climbed 66% year-over-year, reaching $570 million. Meanwhile, revenue from United States commercial customers surged even faster, more than doubling to $507 million. These figures highlight how Palantir Technologies is gaining traction across both public and private sectors. Taken together, the United States market now accounts for 77% of the company's total revenue base after expanding by 93% year-over-year. Despite this rapid expansion, the most revealing metrics are not tied to overall revenue alone. The company's total customer count increased by 34% year-over-year, reaching 954 organizations. While that growth is respectable, it pales in comparison to how much existing customers are spending. Revenue generated from the top 20 customers jumped 45%, reaching $94 million per customer on a trailing 12-month basis. This contrast underscores a deliberate strategy focused on deepening relationships rather than aggressively pursuing sheer customer volume. Karp emphasized that this model revolves around becoming indispensable to customers. He explained that the value is not simply in taking on more problems for a client, but in solving those problems in a way that directly shapes how the customer's business operates. When Palantir Technologies becomes embedded at that level, customers naturally expand their spending because the platform becomes essential rather than optional. This approach was clearly reflected in deal activity during the quarter. Company executives confirmed that 61 agreements valued at more than $10 million each were finalized during quarter 4 alone. At the same time, total contract value bookings reached an all-time high of $4,300 million, representing over 138% year-over-year growth. These figures suggest that large customers are not only signing on, but also committing to long-term, high-value relationships. Management also shared specific examples that illustrate how quickly customer spending can scale once value is proven. One utility company increased its annual contract value from $7 million in quarter 1 of 2025 to $31 million by the end of the same year. In another instance, a healthcare organization attended 2 training boot camps over the summer and went on to sign a $96 million agreement before December. These cases demonstrate how adoption can accelerate dramatically once customers see tangible results. Chief Revenue Officer Ryan Taylor added further context by explaining that Palantir Technologies is actively transforming customers from early-stage artificial intelligence users into fully artificial intelligence native enterprises. He cited feedback from a construction company executive who reported that 97% of employees now rely on the Foundry platform every day. This level of adoption highlights how deeply the software can integrate into daily workflows. All of this operational momentum feeds into why Wall Street continues to focus on Palantir Technologies' Rule of 40 performance. During quarter 4, the company's combined revenue growth rate and adjusted operating margin reached 127%. This figure far exceeds the threshold generally considered excellent for software companies and signals an uncommon balance between growth and profitability. On a full-year basis, Palantir Technologies generated $2,300 million in adjusted free cash flow. That performance translated into a 51% margin margin and represented 82% year-over-year growth. Full-year revenue climbed to $4,480 million, marking a 56% increase compared to the prior year and reinforcing the company's accelerating growth trend. Looking ahead, management issued guidance for revenue between $7,180 million and $7,200 million in 2026. At the midpoint of that range, the outlook implies 61% growth. This forecast represents a dramatic improvement compared to the roughly 30% growth outlook communicated at the beginning of 2025. Analyst Louis DePalma from William Blair noted ahead of earnings that operating margins could rise from 50% to 65% over the next 5 years as government and defense-related demand continues to expand. Even with these impressive fundamentals, Palantir Technologies stock has not been immune to market skepticism. Shares rose nearly 7% immediately following the earnings release, yet the stock remains down about 17% year-to-date and has recently declined alongside other technology names. Valuation concerns continue to weigh on sentiment, particularly given the stock's strong multi-year performance. Adding to the debate, investor Michael Burry disclosed a bearish position in November, drawing a sharp public response from Karp during a consumer news and business channel appearance. Still, Karp's earlier remarks about revenue growth without proportional customer growth suggest the company is intentionally avoiding traditional market share expansion tactics. Instead of chasing volume, Palantir Technologies is betting on depth and long-term value creation. The underlying thesis is that once an organization adopts Palantir Technologies' artificial intelligence platform, it becomes so deeply integrated into operations that spending naturally accelerates over time. For investors, this vision implies that enterprise artificial intelligence adoption may not follow the conventional software growth curve, where expansion slows as markets mature. If existing customers continue increasing their usage at current rates, the company's Rule of 40 performance may become far more understandable than it initially appears. From a valuation standpoint, Palantir Technologies carries a market capitalization of $376 billion after appreciating 2,000% over the past 3 years. Despite that surge, the stock trades at a forward earnings multiple of 120 times, which remains elevated by traditional standards. Analysts expect adjusted earnings to rise from 75 cents per share in 2025 to $3.55 per share by 2030. If the earnings multiple moderates to 65 times, Palantir Technologies stock could trade near $231 by late 2029. That scenario would imply approximately 47% upside from current levels. Among the 24 analysts currently covering Palantir Technologies stock, 10 rate it as a strong buy, 10 recommend holding, 1 suggests a moderate sell, and 3 assign a strong sell rating. The average price target stands at $201, which remains above the current trading price of $144. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.